Does Bitcoin actually pump in February? I analyzed 6 years. I just spent hours analyzing Bitcoin's February performance, and what I found will change how you think about seasonal trading. The numbers don't lie, but they also don't show what everyone claims. Let me walk you through it. Educational purposes only. Always research before investing. The post-halving lie. Here's what crypto Twitter tells you. Post-halving Februaries are guaranteed money. The data backs it up. They say, let's test that. 2021 was a post-halving year. February crushed it, up 36.3%. Tesla bought Bitcoin that month. Institutions piling in. Everyone's printing money. Fast forward to 2024, another post-halving year. February went absolutely nuclear, up 43.8%. Spot ETFs just launched, billions flooding in. Best February performance on record. So the theory works, right? Post-halving February equals gains. Now check 2025. Also a post-halving year. What happened? Down 17.62%. Crashed hard after hitting all-time highs in January. First time a post-halving February went negative ever. The theory just died. What the full data shows. Let me show you. Every February since 2020. 2020 was brutal, down 8.0%. COVID fear spreading globally. Markets freaking out. Risk assets getting hammered. 2021 flipped completely, up 36.3%. Like I mentioned, MicroStrategy and Tesla changing the game. Retail FOMO kicking in hard. Already we're seeing wild swings, no consistency. 2022 gave us something different, up 12.2%. Nothing spectacular, just a modest recovery bounce. Meanwhile, the Fed's getting ready to destroy everything. Then 2023 surprised everyone, went sideways, up just 0.2%, basically dead money, coming off the brutal 2022 bear market. No momentum, either direction. 2024 became legendary, up 43.8%. ETF narrative driving insane flows. Everyone positioned for the halving. Perfect conditions lined up, and the 2025 broke everyone's models, down 17.62%. Took profits after January's parabolic move, killed the seasonal narrative completely. Here's what this means. Look at those six results. Half went up, a third went down, one went nowhere. You can't build a strategy on that. It's basically random. Some years Bitcoin rips in February. Some years it bleeds. Some years nothing happens. The month doesn't predict the move. The conditions do. What actually controls price? Forget what month it is. Here's what moves Bitcoin for real. Federal Reserve policy. When they cut rates, liquidity increases, more money flows into risk assets like Bitcoin. When they hike rates, money gets tight. Bitcoin suffers. It's that simple. Institutional money flows. ETF buys and sells happen daily. Companies adding Bitcoin to their balance sheets. The, this creates sustained buying pressure or selling pressure. real capital moving markets. On-chain activity tells the truth. How much Bitcoin is leaving exchanges? Are long-term holders accumulating or distributing? Wallet activity shows real conviction, not speculation. Regulatory headlines matter more than dates. Positive regulations spark buying. Crackdowns trigger panic selling. Government policy shapes sentiment fast. Leverage in the system amplifies moves. High leverage means explosive volatility both ways. Low leverage means calmer price action. Funding rates show which way traders are leaning. Every February move traces back to these factors, not the calendar. What you should do: stop trying to time trades based on months. It doesn't work. The data proves it. Instead, dollar cost average your buys. Pick an amount. Buy it weekly or monthly. Removes emotion from the equation. Time in the markets beats timing the market. Pay attention to Fed meetings. Rate decisions drive market direction, not arbitrary, not arbitrary dates. Watch those announcements closely. Track ETF flow data daily. Billions moving in or out tells you real demand. This information is public and updated constantly. Use it. Study on-chain metrics. Exchange reserves dropping means holders are confident. Large wallets accumulating means smart money is buying. These indicators actually work. Set proper stop losses. Never risk more than you can afford to lose. Take profits when you're up. Greed kills more than tra- traders than fear. Understand Bitcoin moves in cycles, 4-year patterns driven by having events, but trying to predict individual months, that's gambling, not investing. Bottom line, February isn't special, it's not cursed, it's not blessed, it's just a 28 days like any other stretch. Bitcoin responds to real economic forces, central bank policy, capital flows from institutions, network activity, regulatory developments. None of, none of that runs on the calendar. So here's my question for you. Are you going to keep believing the seasonal myths or start focusing on what actually moves prices? Comment below and let me know your approach, because I see people losing money on this every year. They hear February always pumps and they load up. Then they watch their positions bleed, or they sit out February expecting a crash, then miss massive gains. Both strategies fail because they're based on noise. Successful traders ignore the month. They watch macroeconomic conditions. They track institutional flows. They manage risk properly. They think in years, not weeks. Write this down somewhere. Seasonal trading in crypto is a myth. The last 6 Februaries proved it. Have positive, third negative, one sideways. That's randomness, not opportunity. Focus your energy on fundamentals, central bank policy, ETF inflows and outflows, on-chain data signals. That's where the edge exists. That's how you actually win. Catch you in the next video.